Every tax season, I see the same thing. Amazon sellers hand their CPA a mess of random statements and bank logins and then wonder why they overpaid on their taxes. The sellers who show up with everything organized in advance, however, maximize their deductions and minimize their stress. So, in this video, I'm going to be walking you through a comprehensive tax prep checklist for Amazon FBA sellers, Shopify sellers, and other e commerce sellers. Really, what your CPA actually needs and what most sellers miss, as well as the documents that could save you tens of thousands of dollars in deductions. So, let's make sure that you're not leaving money on the table. Now, before we get into the complete checklist, I do have a quick disclaimer for you here. Unless you work with us directly, we do not know your situation. And so you want to be sure that you speak with your CPA, your accountant, bookkeeper, tax advisor, etc., about your specific and unique situation to ensure that things we cover in here may apply to your business. Because depending on your entity structure or other things, there may be some things that don't apply to you. And so you just want to speak with your tax advisor. Now, if you're somebody that needs help with your e-commerce bookkeeping or taxes, that's what we do at EcomBalance. That's what we specialize in. And so we have a link in the description if you'd like to meet with our team to do all of this for you. Now, here's what happens every single tax season. Sellers scramble to find documents. CPAs send back multiple requests for missing information. Some tax returns get delayed. And worst of all, deductions get missed because the documentation wasn't there. And here's the frustrating part. If you don't have records to back up a business expense, your CPA may have to leave it off the return. And if you don't have the documentation, it may not be deducted. It's that simple. And so there's one category on this checklist that many Amazon sellers completely miss, and it can be worth $15,000 to $30,000 in deductions. So I'm going to show you exactly what that is in just a few minutes. But here's the good news. Tax prep goes smoothly when you have the right information ready up front. You get your tax return filed faster, your CPA can maximize your deductions, and you avoid the back and forth that drags the process out for weeks. So let me walk you through exactly what you need to gather. Now, the difference between overpaying and optimizing your taxes isn't how much money you made. It's how well you documented what you spent and having the right bookkeeping structure up front. And so we're going to start with the core financial documents. These are the non-negotiable things that you need to make sure that you have with your CPA and tax team. Now, first is going to be your financial statements. Your CPA needs to see three things for the full tax year. First is your profit and loss statement. Now, that's going to be from January 1st through December 31st. Second is your balance sheet, and that will be as of December 31st. And the third will be your general ledger. There's going to be a detail by account. These reports form the backbone of your tax return. The profit and loss shows your income and expenses. The balance sheet confirms your cash, your inventory, your loans, and any owner equity. And here's the key. These need to come from your bookkeeping system, not just your Amazon reports, not just your bank statements, your actual books. And so if you're not tracking this in QuickBooks, Sub-Zero, or some sort of similar software, then that's a red flag. And you're probably missing deductions, and you definitely don't have clear visibility into your real numbers. What if you're just using Amazon's reports? Well, let's go into what that looks like, because these reports show your Amazon activity. They don't show your full business picture, your other expenses, your inventory purchases, your software subscriptions, your home office, your vehicle use. Your bookkeeping system ties everything together, and that's why it's important to have an e-commerce focused bookkeeper and tax person. That's what your CPA needs to complete the entire picture. And so let's talk about the Amazon specific documents. Now, first is going to be the Amazon Payments Summary Report. This is the report that ties Amazon's records to your bookkeeping and tax return. It shows your gross sales, your refunds, Amazon fees, what you actually got paid from them. Your CPA can then use this to verify that your income is reported correctly. Second is going to be your 1099-K. If Amazon issued you a 1099-K, the IRS also got a copy. And so your CPA must make sure that the income on your tax return reconciles to what's on that 1099-K. If the return doesn't clearly account for that amount, it can trigger an IRS notice. So be sure to provide that 1099-K to your CPA upfront. By the way, if all of this is feeling overwhelming, this is exactly what we handle for Amazon sellers and e-commerce sellers every single day at EcomBalance with both bookkeeping and taxes. We work with you to gather all these documents, we prepare everything for our tax preparers, and we make sure nothing gets missed. So if you want help with this, there's a link in the description to schedule a time with our team. We'll walk you through exactly what we can do for your specific situation. All right, here's the category I mentioned earlier, the one most sellers miss that's worth $15,000 to $30,000 in deductions. That's your inventory valuation. Now, we all know that we can write off our inventory, but it's how we track it and how we can best do it to maximize those deductions, because here's what your CPA needs. First, they need the beginning inventory value on January 1st of the tax year that you're looking at. Second, they need the ending inventory value on December 31st at the end of that tax year. And here's the critical part that most sellers get wrong. This needs to include inventory in all locations. So not just Amazon FBA warehouses, but also your home or garage, your warehouse, your prep and ship companies, your storage units, anything that's in transit. So, why does this matter so much? Because inventory directly affects your taxable income. So, if you undercount your inventory, you're overstating your profit and you're overpaying your taxes. If you overcount it, you're understating your profit and you might trigger an audit. And so, here's the math. Let's say that you actually had $30,000 in ending inventory, but you reported $50,000 because you didn't accurately track what was at your prep center, your disposals throughout the year, and any other costs. That $20,000 difference could have been deducted, but it wasn't. So you overstated ending inventory by $20,000, which understated your cost of goods sold by $20,000 and therefore overstated your taxable profit by $20,000. And at a 35% effective tax rate, that's about $7,000 of unnecessary tax. Now, accurate inventory tracking isn't just good business practice, it's one of the biggest opportunities to reduce your tax bill legally. Now, your CPA also needs to verify that your cost of goods sold is correct on your profit and loss statement. So, if you're tracking inventory in software, your CPA may need to see those reports to make sure cost of goods sold is calculated properly. Also, you need to track any inventory sold that is not in any software for platforms such as eBay or Poshmark or anything that you may be selling on the side. Some people believe it's just such a small amount, it's not worth their time to track for platforms like eBay, but it can be thousands of dollars of deductions that they're missing out on. One more thing on inventory, if you disposed of any unsellable products during the year, you can generally deduct the buy cost value of that inventory. And so you want to make sure that you have records of what you disposed and what you paid for it originally. So let's talk about deductions that are often left on the table. Home office deductions is one of them. If you use part of your home regularly and exclusively for business, you may be able to deduct a portion of things related to that. So, deduct a portion of your rent or mortgage interest, your property taxes, your utilities, your internet, your homeowner's insurance, your repairs and maintenance. And so, your CPA will need the total square footage of your home, the square footage of your business use area, and it must be exclusively done for business, as well as total amounts paid for each expense category. So the home office deduction is perfectly legitimate if you actually use the space for business. You just need to make sure that it's documented properly. Next would be your vehicle use. So if you've used your personal vehicle for business, supplier visits, shipping runs, product sourcing, you may be able to deduct those miles. And your CPA is going to need business miles driven during the year and your total miles driven. So your business plus your personal. So even if you're deducting actual expenses instead of mileage, you still need to track miles to support the business use percentage. And the next thing here is depreciation and fixed assets. So this is a big one. Any business assets that you purchase during the year might actually qualify for an immediate deduction under Section 179 or under bonus depreciation. So things like your computers, your monitors, your printers, any cameras or lighting for product photos, your office furniture, warehouse equipment, shelving and storage systems, etc. Your CPA needs to see a description of each asset, your purchase date, and the cost. You want to make sure that you don't skip this because these deductions add up fast. Now, if you're watching this and you're thinking, I don't have half of this documented, you're not alone. This is exactly why EcomBalance was built. We specialize in Amazon seller bookkeeping and tax prep, and we make sure every single deduction you're entitled to is captured and documented properly. Now, there's a link in the description to schedule a time with our team. We'll review your specific situation and show you exactly how we can help you. Now, here's something most sellers don't think about, which is multi-state activity and economic nexus. Many states have economic nexus rules, meaning you might be required to file tax returns based on your sales volume in those states, even if you don't live or operate there. Your CPA needs your sales by state report, so your total revenue by the destination state. This doesn't automatically mean that you owe tax everywhere. It just allows your CPA to evaluate potential filing requirements. You should also list any states where you have employees, you have offices or warehouses, you use prep and ship companies, or if you have certain contractors working for you there. These activities can actually create state tax filing requirements. And I know this isn't exciting, but state tax issues are expensive to fix after the fact. And it's much better to address them proactively. Now, I'm going to rapid fire through the rest of this checklist, the supporting documents that your CPA is going to need. Now, here we have banking and credit card statements. This is going to help verify your balance sheet and reconcile any transactions. You also have your business loan information, any interest paid and ending balance. You also have your personal funds used for business. So if you accidentally paid business expenses from a personal account, you want to document that and report it, as well as entity documents. So your LLC operating agreement, your articles of organization, your tax ID letter or EIN letter, as well as owner information. So your names, addresses, social security numbers, ownership percentages, etc. Any estimated tax payments that you might have, as well as contractor payments, who you paid, how much, whether you issued your 1099s, and prior year returns. So your most recent business and personal returns. And finally, your additional 1099s from Amazon, KDP, merch, coaching income, interest. Anything that you do needs to be reported to your CPA. And I know this sounds like a lot, but here's the thing. If your books are clean throughout the year, Most of this is already organized. You're just pulling reports and forwarding documents to your team. It's when your books are a mess that this becomes really overwhelming and much more expensive to fix. So here's what I want you to do right now. Step one, block out 2 to 3 hours this week to gather everything in this list. Put it in your calendar. Don't wait until your CPA is asking for it. Step two, create a folder, digital or physical, and organize everything by category as you gather it. It's obviously better if it's digital, so that way it's easily accessible and forwardable to your accountant and tax team. Step three, if you want professional help with this, and if you want someone who specializes in e-commerce bookkeeping and tax prep to handle this entire process for you and with you, be sure to schedule a time with our team at EcomBalance at the link in the description. We'll review your situation and show you how we can help. We work with 7 and 8 figure Amazon sellers every single day. We know exactly what documentation is needed, what deductions typically apply to your business, and how to maximize your return while minimizing your risk depending on your current structure. And before you go, if you found this helpful, be sure to hit that subscribe button. We release videos regularly on e-com seller operations, finance, tax strategy, and the systems that actually scale businesses. Look, now tax prep doesn't have to be stressful. When you have the right documentation organized in advance, it's straightforward. EcomBalance can help you maximize your deductions, file your tax return, and give you complete confidence that everything is handled correctly. So use this checklist, get organized, and if you need help, reach out to our team. I'll see you in the next one.